Hey, left, right out. It's been a few days since I did a video, but man, today, let's get right into it. It has been a good day in the markets, I'll tell you that, or at least from my perspective. And I know from a lot of people that have been on the long side of this thing, this was a terrible day for me, and the other people that have watched this thing, this irrational exuberance go on and on and on. And then today you had a little taste of reality. Just a little taste. Of course, I got a bedtime reminder coming on there. Just a little taste of reality. You had the S&P 500 close the day at 151 points down, 3.88%. I'm not here gloating or anything. I mean, it sucks because this is going to have some significant pain. But every day further that we go down this without actually coming to terms with the consequences is more pain and greater pain in the future. I'm not saying this is exactly it, but this is a good move. This is a good flushing. And we seen it last night in the crypto markets originally over the weekend. And then last night, you really seen it with the Celsius network deal, locking down people's funds there. You also had some weird Binance issue with Bitcoin. But anyway, Bitcoin broke down. It's right now it's sitting about just under 21,000 a coin. And like I've said before, crypto is like one of those things the only real practical thing I see with it is transferring wealth currently across borders because they'll seize your money the other way and you're only allowed to carry whatever 5,000 or whatever it is on your person if you go on a plane or something, unless you got some private jet. If you wanted to transfer that kind of wealth, you can do that with the cryptocurrency. But other than that, there's a lot of precarious things about it when it comes to like tracking individuals, because you could, as long as you could find their wallet and track them on the network, it's crazy. So I've never been a huge fan. I have played that game because that's where the money was, and in like Shiba Inu token and Dogecoin and all that, and then in the Helium network. But it has collapsed. I never put that much. You only put what you can. Speculate, money that you can speculate with, and there's people that I'm reading now that have put everything in this stuff and they're getting hosed. But anyway, that is not, that could be a canary in the coal mine type action there, the crypto markets. Then we go, like I've talked about the mortgage market. Now you got mortgage rates really pushing up. You got housing market, especially on the demand side, it's really collapsing. People are now, we're going to start seeing, there's going to be a little hang up because there's a lot of people that are going to be, if they try to sell right now or whatnot, they don't have much equity, even the paper value or whatnot. And then you're going to have pushing even lower. This is going to collapse. This is going to be a cascading event. And as rates go up, you're going to see little cracks, little flushes here and there in different various markets until it's almost a systemic issue. And you don't even look on the producing or on like the production side of the new houses. You're talking about the cost structure of that in comparison as well, in relation to what the mortgage market is right now. And nothing looks good. I'll just tell you that nothing looks good. I would not advise anybody buying a home to do so right now, or unless you've locked in the interest rates. Well, I wouldn't even do it then, unless it's like a forever home or whatnot, because you can pick it up cheaper later. At this point. Here's the telltale sign for me. This is why this today is significant. It's not the fact that the S&P is down 151 points. It's not the fact that the Dow almost went down 900 points. Because really in the S&P, that's a 3.8% decrease. That's a 2.8% decrease in the Dow. You got the NASDAQ down almost 5%. That's pretty significant. But those aren't the things that I'm really looking at. I go over here, I go look at the VIX, the fear index. It's up 23% today. That's a heck of a move. We're still at 34. That's not like there's like pessimism. That's not fear yet. We haven't had the real flush out. That's not fear. But here's what I really look like, and I've said this before: the bond markets. And you want to talk about something? See, in my lifetime, I've never seen a move like this. Well, I've never seen real significant rate hikes. We'll see what's going to happen at that. But I've never seen a move like this in the market that I can remember in my lifetime. And correct me if I'm wrong or whatever. But we just had almost a quarter point move in a day. Just last week, this was at 277. Now we're sitting here Right now it's at 3.37. I saw it hit 3.39 today in the 10-year, the risk-free rate apparently. Like, that is an incredible move. I know but in the scheme of things, in the bond, that move right there, that is a jump. That is a jump move. And we will see what happens now. Now you're looking at the Fed. Look, people are saying a 0.75 point rate hike to a whole full percentage rate hike. Well, they should have done that a long time ago. Now we're a little late to the party. Now, no matter what you do, there's going to be a lot of pain. I still don't think they even do that. I'm still calling for the 0.5 point. I think the 0.5 point's enough to crash the rest of this stuff. Like I said, there's a lot of zombie companies out there. Their capital structures are set up not for accessing debt at this level. It's gonna cripple these people. It's gonna cripple these guys. You're also looking at the government itself trying to fund itself, with the Fed supposedly out of the market, and then them supposedly starting to sell into the market, or letting these treasuries roll off. I don't know who's going to come in and buy this, because you have other teetering nations, even if they have dollar reserves. Like, who's going to come in at this point? I don't know. I don't know. There's a lot of questions to be asked here. But what I suspect will happen, you'll hit that 1.25, like I've been calling for I don't know how many months, maybe years. I don't even know. Years, actually. To be totally honest, I've been saying this to my grandpa. I was like, hey, they can never go back to where they were. Like, they can try, and this was even when Trump was in. Then they went to 2.25, and I was surprised they got there. And whatever happened, I was like, they can never go up any further. Every time they do this, I kept telling them, they can. That bar of them, the ability of them to go up further than that is now, that bar is lowered. So now I've said it. My call has been 1.25. That's it. That is it. You're going to see wheels really starting to fall off. You're seeing the cracks. You're seeing the wobble. It's like the wheel bearings on the vehicle are starting to really go out. And the next real move. So if they go 0.75, I mean, you're going to see some shocks like you've never seen before. And I've argued that, we've already been in a recession. I can argue that we've been in like a pseudo depression over a period of time, but it's become normalized now. I know I'm kind of going off a different subject. These shortages and whatever, these are systemic issues related to this as well, not just supply chain, but we're talking about these are mispriced, misallocated resources, and it has to do with really crappy monetary policy. So when you look at shortages, you just can't blame Russia. You just can't blame these. This is the market. Its inability at this point and under this current monetary system to find a rational price there, in a sense. And we can argue that, but I don't want to get too deep in the weeds in that, like academically, and because we're 8 minutes, I don't want to keep this kind of short. But anyway, it's been a good day. So like I've said before, I've been kind of on the short side of this thing. So today was it's a kind of a phenomenal day. I mean, I did take a little bit of profit, not very much. I mean, I barely, because I'm looking at this, I'm like, this could be a big move. I mean, I don't know if it's the move, but you always have to be prepared for that move. So all I did is I took I shaved off a position a little bit, just to take a little bit of profit, because no harm in that, right? Because now what happens is the psychology changes too when you have a move like this, and you have the bond market really signaling something, and then you actually have ramifications that are being manifested in various markets. So now the psychology is actually changed, because now investors, and some of these idiots are idiots. They're just they're naive. They're starting to actually see that there are some issues. I mean, there's Fisher-like issues in the economy, and that the market itself was a representation of inflationary policies over the years. That it was a bubble, that has been a bubble, and that all these speculative assets that are now people were pushed into through the manipulation of interest rates and the price of money. So it pushes people out further on the risk spectrum into these really, crypto, they call them shit coins and all this other jazz, into companies that don't turn a profit, that are operating by rolling debt over and over and over again, and we'll make it up on volume type mentality. All the people that are pushed out in there. I'm really worried about a lot of these pension funds, and I don't know what. And I thought when we were having this first teetering, and that people were going back in there, my gut feeling was that these are these funds that they have to buy, they have to be in there, accumulating assets or whatever, or trying to chase that yield so that they can even cover the cost of the people that are collecting the funds. But right now, when these things happen, you kind of feel sorry for them, because there are probably going to be some funds that are going to go totally tits up. Not to mention all the hedge funds. We're going to start seeing it looks like in the crypto side, we're going to start seeing that. We're going to start seeing companies going under. You're going to start seeing it, especially on the mortgage side of things. There's a lot of mortgage or lenders out there. There's a lot of mortgage servicing company. I was talking to somebody that is in the mortgage game, and their volume's drying up. Now soon you're going to see some of those guys going out. You're going to see some of those real estate agents really getting hit hard. Then you're going to start seeing a lot of these, like I said, the zombie companies laying people off. You're going to start seeing some ramifications, and these things take a little bit of time, even when the fire starts is lit. Now the market will reflect that quick and fast and in a hurry at times. And then so now we know what is happening, or we know what's going to happen. So my next goal, which I've been talking about these occurrences for a long time, and it's not like I'm a rocket science. I listen to guys. I listen to people that are vastly smarter than me. I read their work, and usually I guarantee. Here's the thing. I'll tell you this at this moment: they're not guys on CNBC. They're not guys on Fox Business, or they're hardly ever on Fox Business. Some of them are dead. Some of them have really good podcasts, or just guys on. Anyway, that's besides the point. But it's not hard to see, and I kind of lost where I was going. But it's like, oh, now this stuff is coming to a head, so now we got to look. What's the next move? Okay, well, we know this is happening. You might be able to prepare if we get a bear market rally. You might be able to get in on some of this if we get that rally. If something turns around, if you get something from the Fed. But now we look at what the Fed's going to do, because once this stuff starts really hitting the fan, we're looking for that next turn, because there is no way, or when we're judging their actions off their past actions, there's no way that they're going to let this go. So they got two choices: fight inflation or really break everything, and either one is or not fight inflation. And so fight inflation breaks something. Don't fight inflation, let everything break itself. So you can slow the train down, and the train's still going to fall off the track, or you can let the train speed up and let it just careen off the tracks. Either way, we're going off the tracks. So what we need to look for the next, I guess, roundabout way, what I'm saying is look for the Fed now to turn severely dovish here in the next, I don't know, when this thing really starts manifesting, these things, then they'll be coming back in with QE. And that is when you have the currency crisis. We're already seeing those things play out on the currency side of things. We're looking at Russia de-dollarizing. They have been for years, but now they actually have other countries with them in trade agreements, in bilateral currency agreements, And look at what they're doing with the ruble oil, ruble gold. Look at these other trade agreements with India, China. You're looking at these other countries. What does that do especially when it gets on the petro side? Well, then you're knocking a leg out of the dollar. I'm just telling you that right now, because the petro dollar is a real thing. And you take that market away. You're looking at Saudi Arabia looking at getting away from the dollar. You're looking at, and that right there is like a nail in the coffin. You're looking at these things setting up, and which these things in the past, when they were working in our favor, allowed us to get away with a lot of this reckless monetary policy. It allowed us to export our inflation. It allowed us to get cheap goods for nothing. And why these guys over there making them are sacrificing or doing with less. And now now that is, those cracks in that wall are easily seen. The next time we attempt something of the nature we did in this last 2 years, it's gonna it's going to be the final crack, and that's when the dam breaks. So that's when you do need those assets, like the hard assets. That's when you actually do need things like land and gold and silver, things that are tangible, things that have lasted over millennia. Um, that's where you, or in this case, because the market will go up in that instance as well, especially, because you look at other countries that have completely destroyed their currencies, the markets go up. So in those cases, sometimes, yeah, you go long the S&P or whatever, a large basket of companies. I mean, I don't know about nitpicking one or two of them, but you go long those things, and you hold the gold and the land to store the wealth, and then you buy these other things that they're going to inflate up again to also stave off your, the somewhat withhold your purchasing power. But so that's the thing you look at down the road. So that's the next step after we're careening off the cliff here. So the next step is them actually reversing trend and going back to like QE infinity, and that was the last QE infinity. That's what they're calling it. So now we're gonna QE infinity and beyond, the Buzz Lightyear story. I guess that's what I'm gonna call this next one, because this is where everything launches off, and it's not good. Things are not good because we're not producing real tangible objects. I mean, I guess we're producing paper dollars or digital dollars in the end, but America itself, with all these with all that's going on right now, I was like, I can't think of an industry that's not severely impacted by either government policy, which or called government regulation, fiscal policy, or monetary policy. And I can't think of one that's affected in a positive manner in any of those. And normally you don't have fiscal or government policy affecting those in positive manner, in a positive manner. But sometimes you can have like at least their foot's off the back of them. You have some sort of a free market interaction, and you have those productive activities and innovation and things of that nature that are going on. And in this case, you don't. Everything is severely negative. And it seems when I was a kid growing up, I remember thinking that people in the government were among the smartest among us, and gradually I realized that they are not. And it's amazing, they can do the same thing over and over and get the same result, and still think they can do the same thing again and again and get a different result. The definition of insanity. I mean, these people don't know anything at times. They're not the smartest people in the room. In fact, I'm convinced that they're the lower echelon of society at this point, or they're part of some grand scheme, conspiracy theory. But anyway, I'll talk to you later. Peace.